Today, welcome to the piggybankadvisor.com show, a show that talks to your personal finance issues, but also helps you onboard trading platforms, of course, such as Trade and the INFX platform for online trading. So really, we've seen a lot of developments happening, especially on the stock markets. On the ZSE, looking at the main indices, we've seen them going up roughly around 30%, which sort of indicates a mini bull run that has been happening. So the main question will be, what do you do as an investor during a bull run? Okay, so just to define a bull run, right? So it normally occurs when there's a sustained increase in share prices. So most of the shares would actually be going up because of demand on the stock market. Yeah, that sort of pushes share prices up. But the bottom line is that normally bull runs happen when there's a positive tone in the market. For example, when GDP growth is actually on the upward trend, there's positive investment sentiment, things such as unemployment rates going down. So really, that sort of boosts, activity on the stock market. You'd also find that even during bull runs, there are periods of IPOs, what are called IPOs, initial public offerings. So that sort of boosts the bull markets generally. But looking at the ZIM scenario, it's a bit different because we're not experiencing such increases in terms of GDP, and also the economic indicators such as inflation and the like are not that encouraging. But still, prices are going up. So the major development there is the inflation figures that we're seeing and exchange rate movements. So what we've seen is that a lot of market participants are looking to preserve value, and they're using the ZSE as an avenue to do that. So there's been a lot of demand, especially for the quality stocks on the ZSE, and also the liquid ones. We've seen prices actually going up. So really, sometimes it's quite difficult really to identify or to even predict a bull run, because we normally then identify it when it has sort of happened. But however, there's an opportunity really for investors out there. If you're keen to take advantage of some of these developments, you could actually get into the trend quite early, and then take advantage of the rising price. You can then sell out and make a good profit over a relatively short period of time. Of course, it's quite difficult really to identify when to get in, when to get out. But what is important then is when it's out, there's the sudden increase in the supply. So as a result, because of the supply, you could actually be trapped, and the price could actually go down when you've actually invested in the stock. So when that happens, it's called a bull trap. So how then do you avoid a bull trap? That's the question. So Piggy has always been recommending investors out there, whether you're a retail or institutional investor, to look into well-managed companies with good corporate governance, that are cash generative and that are generally liquid, which helps you in terms of moving in and out of positions, or companies that are known as blue chips. It's very important then to also follow company developments, market reports, things such as trading updates that are being pushed out, to sort of focus how some of these companies will be performing, and looking at, say, half-year results and or quarterly performances. It actually helps you then understand the best companies to invest in. So some of the blue chips on the ZSC include companies such as Delta, your Econet, Cassava, Old Mutual, BAT, Zimbabwe, OKZim, Insco, Simbisa, Exia, Padenga Holdings, Citgo, and even Citgo International. So these are sort of well-managed companies that have a strong business model, and most of them are hedged against inflation because of their capacity really to generate FX through exports. So these are sort of the companies that you'd want to follow and understand, especially during these periods of bull runs, etc. But generally, what Piggy recommends is for individuals is to look into companies where multinationals actually are shareholders, because some of these multinationals have very strong corporate governance standards, and even in terms of reporting standards, investor relations. It then also influences the quality of the management teams, and also the technical expertise that they bring to the fore is actually quite significant. So that's just a tip that you use really to track companies that you could actually want to buy for your own portfolio. But right, so guys, let's join the WhatsApp social trading groups that are based on WhatsApp. The number is 0783584745. Go on the weblog www.piggybankadvisor.com. There are links there that could also help you to download the Android app. We have the Android app for Piggy Bank. You have access to the content on the go. Go also on the social platforms, share our pages on LinkedIn, Facebook, we're also on Twitter, and also open a free INFX demo trading account and start learning how to trade FX. There's also a course that we've recommended called Baby Pips. Go on the FX trading session on piggybankadvisor.com, have access to the course, complete the course, and yeah, start trading. So that is all we have for today. Stay tuned, stay plugged in on piggybankadvisor.com.